was messing with it. Good morning, traders and investors. Welcome to Friday's edition of Pre-Market Info, brought to you by OptionsHouse. Jumpin' Joe Young, how you doing this
Oh, it's
morning?
a fantastic Friday, not like a muted Monday, right, Joel?
Yeah, you never know. You never know. This technology stuff is really, beyond my years.
Yeah.
But
What is going on out there today, Joel? What is happening?
what is happening with the weather or the markets?
Both.
Oh, nothing. Just another buying opportunity on Wall Street, right? Right, Dennis?
Is that what they say? Is that what they say? This is another buying opportunity? That's what everybody thought yesterday, I will tell you that. A lot of people coming in yesterday thinking, well, last time we sold off and had a decent sell-off, this market bounced right back the next day. So here they were last night actually bidding up the S&P futures. We traded up to 1828, but they were bidding up a lot of the individual stocks too after hours, trying to pick them up on the cheap, thinking we were going to bounce back today. Wrong. Everybody market likes to punish the maximum amount of participants, and everybody gambling last night that we're going to bounce right back is fleeing the market here this morning because we are down 13 points.
And a couple things of note here. We did get the bounce yesterday, got up back up into the 1820s. The low that we hit this morning, 1808, that's a buck and a half below the low for the year at 1809.50. So potential double bottom there. But for some reason, I don't think that 1808 is gonna hold up. But Dennis, come on, man. We were talking about a strangle, and once I started talking long term. I started thinking, oh, I need a June for this move. This would have been one of the instances where,
So it is short term.
yeah, the short term, you wouldn't have had to pay all the premium. What were we looking at? We were looking at the 180. I think it was at 183. We were probably going a little bit too far
It
out.
was at like 184, and we were looking out at 181, but you were looking for June. But I bet you, if you look at, well, I don't know what the premium would have been
Yeah.
for the weeklies, but they'd be getting close to the money right now. They'll have some premium juiced in there this morning, obviously, with the increase in volatility that we're seeing the last couple days, too. So, yeah, maybe you should have went a little bit shorter, Joel.
But you could have went. You probably, if you wouldn't been paying all that premium, you probably could have went if you were doing a strangle. You didn't want to pay up as much. You probably
Yeah.
could have went a little bit closer in the strike.
For sure, for
Yeah.
sure you could. Like we were just looking at, we were trying to get you down, trying to get that premium down because you want to do the long-term thing. But short-term thing would have been the way to go. And yeah, you could have went a lot closer with the strikes. And anybody that did that is getting paid today.
And is this just another buy the dip? I mean, we have that's just been the mantra for the market for what the last year and a half, 2 years. Here you have a big down opening. I mean, don't we always rally back from these big down openings?
Well, we have in the last couple of years, but I don't know. I'm a little concerned here just because you're seeing so much money flee into defensive securities.
Okay.
Look at gold here this morning. Gold is popping here again. We're up another $7, taking off in the gold futures. Individual miners were very strong yesterday. So, and also if you look at like defensive issues like AT&T, Verizon, they were up yesterday. They were looking for defense. They were playing defense, and this is the first time this year in 2014 that I've really seen the market really trying to play defense. That's what they were doing yesterday. It's what they're doing here again this morning as gold is rallying again.
Yeah, just taking a look here at the gold market. This is the highest the contract is traded here. Let me get it up on the screen for our viewers. This is the highest that gold has been since November 20th of 2013 when we hit 1275.80. The high currently in the session is 1273.20. So if you're holding on to the long side, there's a potential target for you. And the day before you had the 75.80 high, you had a 78.30 high. So there's a couple levels to look at in the gold market.
And a lot of these miners were flying here too. Let's start with a different one here. We always start with like the NEM or the Barrick, but look at Anaco Eagle Mines, their AEM from yesterday, because this stock was popping big time. We had a dollar rally here. Stock was a $26 stock just about a week and a half ago. It's actually trading 30.72 here this morning, and probably going to go higher than that. I would bet even. The stock has had a really good run.
And why do you think this one is made? Well, I mean, they've all made big moves, but
They've all just moving with gold. I mean, they're flying. People were coming in this year. They were actually been looking for what didn't run last year because we know Alcoa had a good pop even despite the bad earnings. But gold has been popping nonstop, and the miners have too. Money is fleeing an area where it wasn't strong last year. It was looking for last year's laggards, and that's what's going into. And obviously defense. So the gold miners are going to be defensive, and that's where their money's fleeing.
yeah, you had that the little cue when the gold went down. This is originally when the gold made the low under 1200, but when it came back and tested that level again, the relative strength on some of these miners was definitely there. It didn't get as low as when the gold had I don't know, washed out at like 1180. But looking on this chart here for the AEM, only trading up 11 cents. So at yesterday's high, which was 30.69, I believe. So there's still just treading around there, so you may be able to purchase it without actually having to be in a gap situation here.
I
Not
doubt it.
you
I
got
think
it.
it's been 30.71 right now I'm looking at some of the other miners, who are trading up 30, 40 cents. I bet this thing, you'd have a rough time buying this thing under 31 here in the pre-market. Best offer is up at 31.41. So you got to pay quite a bit higher, and this guy's trying to bid up. I think you're going to have a rough time buying this under 31 as long as the market stays weak, obviously.
Right, and the gold stays strong. So just going back on the charts here, it is coming into a little bit of resistance at the 30.98 level. He had a high at 30.98 and another high at 31.19 back at the end of October here. So no major resistance here until you get into the 31 handle for AEM.
I think 31.96 is where I'm seeing the major resistance, and
Ooh.
that's up there on the October 28th high. So that's what I'm looking at. I think you could see that possibly even today, but I don't think it's probably going to go quite that high and put it up $1.30, which is quite a big move. But I do think you could see the 31 handle here, maybe even this morning, depending on what the futures do, gold futures that is, and the S&P futures. Also popping is Newmont. It's up another 30 cents here today. NEM. That stock has been breaking out too. Days ago, just kissed down, had that little pullback for you, got down to 24.09, and then boom, boom, off to the races again. It's up $1.50 since that pullback just 2 days ago.
Yeah, you got this one, right, Dennis?
Yeah, I picked this up in my portfolio. This was not a trade. This was an investment. I was like, some of these miners, I don't have, I'm very, very light on gold. I've had light in my positions in gold for a while ago there. The only one I really had was Barrick, and I was like, you know what? I kind of like this Newmont chart. It's starting to look pretty good. I picked it up, I think, at around 23.30. So I'm actually up about 10% in the thing, and in 6 trading sessions, I almost, you wonder when you get a 10% gain in 6 trading sessions if you should ring the register. But I bought it with the intention of holding it for a while. I was hoping eventually this thing could get up in the $28 area again. So I think, it's off to the races. I wouldn't be chasing it here. Just like I was saying before, you got to wait for pullbacks, but it's looking good on the charts
You know why you're light in gold in your portfolio, right?
because it keeps going down.
Yeah, because you bought it American Barracks at 40.
Oh, I know. On Barrick, I got killed on. I'm averaged in actually a little better than that. I think I'm averaged in around 33
Ooh.
bucks or something on the Barrick, but that has been an ugly one there, and that's one of the worst ones. And I look at the portfolio, I'm green in so much stuff because the markets are at the high, but then Barracks jumps out like a sore thumb, and I'm way down in that thing, obviously.
Uh,
So
just
that's
if you're
much different. Oh, go ahead.
no, I just say if you're a player in the Newmont here, you did have a high yesterday and pulled back a little bit from it. You had a high at 25.50, so you'd really like to see a follow through that 25.50 level with gold trading up, and then you have a minor resistance point at 25.75. But the major resistance comes in the 26 handle, double top 26.23 and 26.24.
Let's move into some of these individual stocks that reported here last night. And we had Microsoft coming out last night, and the stock is popping. Last night, popping in the pre-market here as well, despite the market being down 11 points. Microsoft blowing the numbers away. 78 cents versus 68 cents. 24.52 billion versus 23.68 billion. Credit Suisse raising their price target up to 42.5 on this puppy. And the stock is trading up at 36.91 right now, which is up 2.5%.
It was quite a bit higher. It got up almost. The initial pop took it up to almost, or just over the $38 level. If you
Come
can,
on, did it really?
yeah, 30.
Stock as thick as Microsoft and they buy it up over 38. These overshoots, man, right on the initial report. Sometimes these things just get crazy, and that seems ridiculous. You don't see a Microsoft $2 pop very often. I mean, it was a really good report, but that seemed ridiculous.
Well, you want to
Over
even know what's
50 bucks.
more ridiculous? After it hit the 38.05, it came
Yeah.
back down to 36.06.
Well, that had to be. Are you sure that's not before a report? Is people just getting crazy, or so it just had a
No,
wild trading range in the whole? Is
I,
that like in the whole first bar?
first half hour.
First half hour. So went all the way up and all the way back down and then bounced all the way back up again. Wow, chop
Yeah,
fest.
not back up to the high here, but now you're just getting a lot of consolidation. Remember, we saw this on the Netflix chart yesterday, and I hope Joanne pops on because I'd like to see how she did in
Yeah.
that Netflix position. I think she sleeps in a little bit later than some of the guys we got in the room
Oh,
here,
well,
or else she's not signed into the chat room.
Jesus, probably not signed in.
But remember, it had the big move, and then obviously someone had their foot on the sell pedal at 394 yesterday. Remember that consolidation? It did
Yes.
get through there a little bit during the regular session, went a little bit higher, but overall that turned out to be a really important level. So now, gleaming this beautiful Microsoft chart, I guess if you're long here, you're getting a lot of consolidation here, right around the $37 level. And then if you go to the daily charts,
A lot of highs there.
that was the area that we had a lot of problems with over the last. It was going back over last week and part of the week before. So let's see what happens. Gets back above 37. Hey, I'll hop on the train there and try and ride it up on the upside. But man, those four tops there just look like pretty good resistance, and with it all the way up a buck, this could be the one where it opens up at the high and then ends up, if you have a really bad day in the market, might end up negative.
Whoa, that's a big call. Bold call. Starbucks, what a wild ride this one had after hours. They reported earnings 71 cents versus 69, a bit light on the revenue, 4.24 billion versus 4.34 billion, and they absolutely killed it right off the initial report. Knocked the stock down to a low of $70.81 after hours. And then they just started climbing and started grinding back and through the 71 handle and through the 72 handle and through the 73 handle, and now we're trading at 74 and a quarter, Joel. If you were out there picking bottoms in the Starbucks right after the report, you're pretty happy right now.
74.20 was the high back on Wednesday. So let's keep an eye on that level. Did get a little bit higher than that in the pre-market here. Even sprinted up over 75. Got to 70. What's that? 75.02. 70.
I like that 75 number.
It's not going
I,
to 75 today. I mean, you can.
it's only 75 cents away. I definitely, and I'm not saying you should be buying it here trying to pick up 70 cents. I like it for a short. I think if it gets back up there around that
Okay.
74.90s in that area, that's where I might try to layer a couple out and see what happens. So it's getting above 75 and a half, maybe take it off, but I don't know, do a risk return, risk 75 cents, go for a couple bucks or something. But I like that area. If I can sneak on a short up there, I might be trying up there in the high 74s, at least for myself.
Okay, if you look at, and how many times have you seen a chart like this where this thing's been selling off a cliff since, the $82 level? Obviously, Sazi came out and talked about this, and it sold off. But selling off, makes a low of the move yesterday, comes out, and you get this little pop. Don't you think all these people that are trapped from 82 and 79 and 75, don't you think they're looking to be getting out on this pop here? I mean, is this one earnings report going to turn around this chart?
That's what I'm saying too. I think the chart doesn't look good, and I think if you get a little more of a lift, I'm just being greedy. Maybe maybe you should be just taking the 74 and a quarter and being happy. I was hoping to get up a little bit higher
Okay.
because I remember that 75 level before, kind of giving you a little bit of support, and then all of a sudden, if I'm subscribing to that theory world support becomes new resistance, then I'm leaning on that area. So I think I think you might get a little better price than the 74 and a quarter, but I don't know if I'm long the thing. I'm probably dumping into this rally. You're right.
Okay. All right. Any sympathy plays with that? Not really, huh?
Starbucks, what's GMCR? Is it doing anything here? Green Mountain Coffee Roasters? It's not really. It's trading down here a little bit. So There's not as much as there used to be. You look at Timmy O's in Canada, Tim Hortons, THI, but I don't know Dunkin' Donuts or any of those
Ti
like
what
really. But it's kind
what
of upscale coffee. So I
what'd
don't
you
know
call
Dunkin'
it,
Donuts.
Dennis? Timmy
Oh, everybody in Canada calls it Timmy Ho's, Tim
Timmy
Hortons,
Hose.
THI.
The reason I asked is because I felt like I was getting some kind of Canadian insight there, and I did. I really
You
did.
don't call it Timmy Ho's in
I'm
Michigan?
going to now, for
Timmy
sure.
Ho's. I'll meet you
That's
at
good.
Timmy
I like
Ho's.
that.
That
Good.
thing's been drifting down like look at that Timmy Hose chart. That thing's down how many days in a row, Joel? THI. Bring up that chart. Looks like it's been down here basically the entire year of 2014, just going down every day.
Do you go, hey, I'll meet you at Timmy O's? Hey? Do we go, meet you at Timmy
Joel,
O's?
do you know how to use A?
A.
A is well, I kind of used it right. A-E-H, it's spelled. It's not spelled A or all these other spellings you see of the Canadians saying A. It's spelled E-H, and it's affirmation. You're always saying, "Oh, that's Tim Hortons chart. That looks pretty bad." A. That's how you use it
Oh,
correctly.
so
So
you
I just
say,
taught you
they
all.
say, let's go to Timmy O's. Eh?
Like you,
Well, that's a question.
it's
That's
already
not affirmation.
it
So
would
you're
be
still kind of doing it
implied that
wrong.
you're already going there. Like we're going to Timmy O's, correct? Right?
Yeah, it's exactly it. It's like saying right. Yeah, it's affirmation. You're affirming basically what the other person is saying. So, like exactly what I was just saying. This Tim Hortons chart, this is looking pretty weak, eh? That's how you would use it correctly. So now I want to hear all you guys using that correctly next time.
And
Everybody in the chat too. We just
I
taught you how to use a correctly and everywhere else.
and if and you would think my mom is actually Canadian. You think I would have this stuff down by now?
Yeah, come on, Joel. You're like half Canadian over there, and you don't do it right.
Okay. All right. So what else did we
Moving
look?
on, moving on. Procter and Gamble reported this morning. I'm kind of mad at this report right now. PG reported earnings $1.21 versus $1.20, 22.28 billion versus 22.35 billion. So the number is pretty. The number beat the bottom line, but the revenue was a bit light. And they actually were selling the stock off a bit this morning. I actually came in short. So, so that's why I'm biased because I came in short the number. I actually was shorting it last night. I was getting bid up and I was like, they're going to give me a 70-cent lead on this thing. I'll try it. I'll take it short through the report. Came off. I could have covered 78. And when I offered 78, I was like, this report, we're down 11 points in the SPOOs. This report doesn't look that great to me. I think I can get this covered in the 77 handle. Lo and behold, the thing's right all the way back up to $79. I'm sitting short the thing. I'm like, But we'll see what happens. I don't know. I don't love the report, but the thing is trading 75 cents higher right now.
Yesterday's high, right in opening up into some minor resistance. 78.97 was yesterday's high. So Dennis, you gotta hope that sellers reemerge here at the $79 level. Now that we've traded up 76 cents from the close here, I think you're gonna have a hard time. Covering ahead of the close at 78.24, 78.12. But here's another scenario where look at how this is an ugly looking chart going ahead in the earnings, and now
Yeah.
you're getting a little bit of a pop. What is going on?
You know what? You're seeing that quite a bit, actually. The stocks that look and kind of have ugly charts going into earnings, they seem to go the other way. I've just noticed that lately, too. And, stocks that have actually been running and then they report pretty decent numbers are weak. Like, look at Bristol Myers, for instance, here. And actually, BMY is trading a bit higher here. But they reported this morning, too. And I guess this isn't the best example because it was weak yesterday. But overall, from, if you look at the last 3 months, Bristol Myers is basically up since they reported from like 45 bucks all the way up to $55. So it's been on a tear. They report earnings this morning and blow the number away. 51 cents versus 43 cents, 4.44 billion versus 4.29 billion, and they're only up 50 cents. Like that wouldn't, that's a number that's blowing it away. I think that would be up a buck or two at least, but it's not. And I wonder if, everybody's just leaning and everybody's kind of been in this issue and it's just so it's a question of whether the trade is crowded or not more than anything on some of these earnings plays.
Wow, big spike up to 55.75, and then
We got excited.
Yeah, got come back and kiss the $54 level. But hey, if you could rally another 50-60 cents from here, you have 4 highs in a row between 55.07 and 55.18 here. Still 70 cents away from there, but boy, you got to figure they're going to be lining up here. Negative market, you figure they're going to be lining up here at 55.
Hey, just going back to Procter and Gamble real quick.
Yep.
With a chart like that, there could have been some expectation for maybe like some weak guidance. and they did actually reaffirm guidance. So I mean,
Right.
it's kind of, you kind of take it one way or the other with the reaffirms. It's either the okay, whew, they reaffirm guidance, or oh man, they're only reaffirming guidance here. So
It's a great point.
I think in the case of Proctor, there might have been some expectation for kind of like weaker moving forward.
It's a great point. Maybe everybody leaning in. This is a factor whether they're crowded and everybody's leaning a little bit too on the negative side on that one, and this not obviously as bad as they thought it was going to be. And the stock pops up, just like Goldman Sachs on the other end of the spectrum. Remember when they reported? They reported, they blew the numbers away. I think by like a buck or something. It was like a crazy awesome report. Stock was trading up initially, and then gave it all back. Ended up closing that day red. That was when it was up at like 180, and since that report, it's down at 170. So maybe the same type of deal where you get, everybody leaning along the thing. It's like, oh, they beat the numbers, but and they beat it pretty good, but I really thought they beat it more. So it all depends on sentiment too going in. So it's a great point. When you get a weak chart coming in and all of a sudden they reaffirm guidance, it's like, oh, maybe it's not going to be as bad as we think, and maybe that's why it
That
pops.
stock, Goldman's $10 lower than from when it released the
Yeah,
earnings.
man. Yeah, they're taking the financials have been getting absolutely whipped on this sell-off here. They were getting whipped, and the financials were your leaders, so I guess that was your tell a little bit too. And we kept hanging out up there in the 1840 area for so many days in a row on the S&P futures. The financials were not participating, and they were getting weaker. And we obviously have heard from all those before. Like, look at the Goldman chart, look at the Citi chart. There's another one for you too. That thing's been down like 6 days in a row here since they reported, or did they report?
Yeah,
Did we
they
get Citi
did.
before?
Remember?
Yeah, yeah.
Yeah, they
Since they
met.
reported.
I think they missed.
JP Morgan, same story. They've been down like 3 days in a row, 4 days in a row here. Wells Fargo is the only one that's been kind of holding up, but it's a little more defensive play. But I mean, these stocks are weak. And this Citigroup chart, holy cow, man, that was $55 just 5 days ago. It's $50 stock here this morning. It's trading 50.23.
Let's look at this Citigroup chart here. Did miss on the earnings front. Bunch of lows here, right where you're talking, Dennis. So we'll see. Has a chance to rally. Well, actually, it's trading below these lows. You had a low at 50.68. Nope, there's 50.27. You had a low on December 12th at 50.27. And then you go a little bit farther back, and you had a low at the 50.04 area. Nice round number like 50. So we'll see if that can that can hold up. And then I'm just anxious to
Stick
see.
with the 52, Joel, because actually I can see 80,000 shares in the book bidding there too. So that
Really?
would back up your whole premise. There's even order flow. Somebody, institution sitting there saying, yeah, man, I'll buy some at 50, or I'll maybe bring in a short at 50 or something. But somebody's bidding 50. So and that's pretty significant.
Let's look at BAC because there's a stock that blew away earnings, right?
Yeah.
And they blew away the street, got up to 1740, or how high did it get? 1742, I believe. Even maybe traded higher in the pre-market. 1742 was the exact high. Now you're back under the $17 level. We talk about gaps here. And let's see where it gapped up from on earnings day. You had a high on the gap day of 1677. You filled the gap yesterday at 1674. So it should be a good swing area. If it can't hold this level, you're looking at 1653.
Let's move on to a few other ones here reporting this morning. Xerox, one we have not talked about in a long, long time. I'm leaning the wrong way. I'm doing bad on this earnings report. I'm leaning the wrong way on this one too. Actually, it was just a little bit of stock, very little bit of stock actually. I got stuck with it. I bought it after hours, and then I got stuck with it. And I was like, I didn't have very much stock to say. I'll take it through the report for fun. But anyway, stock's trading down 26 cents here right now in the pre-market. They reported 29 cents versus 29 cents, which was in line. The revenue was a bit light though. 5.57 billion versus 5.64 billion. They are raising the quarterly dividend, and they do see Q1 EPS kind of in line. 23 to 25 estimates are at 24, but they're still knocking the stock down a bit here in the pre-market.
Just kind of lumping here at 1150. The low of the pre-market session, not getting a bounce as of yet. Looking at the range from yesterday, 1167 low, 76 close. That is going to be your resistance area. I do see some support coming in for you, Dennis, if you're willing to hold it down to the 1134 level. You had a low on the 16th of December, 1134, and a low on the 18th at 1135. So some early parameters for Xerox.
S&P futures bouncing here again. Brent, did we have anything that just break there? Because S&P futures has popped up 3, 4 more points
Mm,
here, basically since we started the show.
I see the
We're only
move.
down.
I don't see any
Because
news.
anybody that comes in at any time and sees the S&P futures,
They come in and buy it.
you got to, oh my God, especially if
Some
they,
big institution just woke up, some big
uh,
institutional money manager, and said, "Oh, we're down 14, 13 points. I'm buying this right now," and he just moved it up.
They said this is a black swan event. I'm all in.
Carl,
All in.
Carl woke up and said, "Oh boy, look at these futures are down. I need to add
This is
them.
a no-brainer.
Yeah,
I'm gonna come in here.
I got to add to my Apple position."
You
I'm
have
buying Apple this morning. What is Apple doing this morning? Apple's down 250, so maybe it wasn't Carl this morning. At least not on the Apple. Big pullback in Apple. What do you think of that Apple chart, Joel? Just while we're on it,
Uh,
557 getting a little toppy, couple tops there last couple days.
Yeah, it's been the 530 to 560 range here for quite a while, and even Carl's comments couldn't boost it. I know it was up 557. Actually, there's a couple highs here, and let me look at them here. You got three highs here within a nice area. 565.50 we hit, 557.29. Those are the last 2 days highs. And then you go back to the 16th and you had a 556.85. So I'm all out sell here until this thing gets above, clears that area, perhaps gets to 358. And, it's had the run, and I'll tell you this range between 530 and 560, it's been trading that for quite, and Carl has not been able to push it up. So we'll see.
I
We'll
mean,
see
it's
what.
with Carl. It's kind of been like more of the same. I mean, he hasn't really said anything new. Okay, yeah, I'm buying some stock here, but he hasn't changed his thesis or anything like that. So I don't know. I don't know how much more Icon can
Doesn't
do.
Apple need a new product? I mean, come on. Let's just
You
be
keep
serious.
saying that, but
Yeah,
it keeps fighting back though. So it keeps going up. I mean, it's a whole cash cow type of value investor's dream, I guess, right now. They just keep buying it. But I agree, Joel. I don't see where the growth's coming from here.
right. I mean, they talk about then they talked about a new phone or something that they're supposed to be coming out that has a different kind of
iPhone
case.
7,
Okay,
6. What number are we on? I don't even remember what number we're
I
on now.
think
Are we on
we're five.
6? Are we on 7?
Something that's on the radar for Apple is like the Apple TV, but it's been talked about for so long that we're past that now. If they do release something like that, it's pretty much priced in, I feel like already.
You know what's kind of interesting too, and this is once again going to a longer term chart, which we occasionally do here on pre-market info. Benzinga is brought to you by OptionsHouse. You had a
Sure.
705, 705.07 all-time high in September of 2012.
Yeah.
Cascaded down to 385.10.
Yeah.
Okay? 50% retracement of that entire move is 545. Okay?
And we have hung out here for the last 2 months in this area.
Yeah, yeah. So if you do a projection, you had what a over a 200 point break, right? From 700 to 400, 300 point break.
Yeah.
So if you project that 300 point break off the 575 high, Apple could be going to 275.
Dude, come on, Joel. That's ridiculous. So, anyways, strike that from the record. There's no way in the world the stock will ever see 275 here again. But I guess technicians, they can kind of draw any theories. The only way Apple's going to 275 is if they find out the iPhone causes cancer.
Yeah,
That's the only way that's
I
going to
I
275.
remember when Enron was at 80, and you were like,
Enron.
yeah, you
I
remember when
remember
Enron
Enron.
was
I
at
can
80, you were like, that's
Joel, I
not.
have a physical Apple iPhone in my hand. Enron was all BS and didn't even do anything. It was all just numbers, and it was just nothing. I'm holding an iPhone in my hand. It works. This is made by Apple. It's a real product.
Would you stake your three potbelly lunches on that, Dennis? All or nothing?
I will take
Don't even go on the pot belly
new
lunch.
highs in Apple before 275 all day. I'll tell you that one. I'll even take new highs in Apple before 375.
How
That's
about
an
how
interesting
about
bet.
456 versus 656?
No, you know why? Because it could pull. Because I'm still on the same side with you. I think they need a product.
Okay.
So I'm saying there's no way. There's too much value in the thing for it to get to 275, or I think even 375. Could it get to 475? Yeah, man. Like, I mean, that's not that much further down than this. We just saw it go down to the 300s a
If they
while
had a new
ago here.
product since
So
Jobs passed away on my birthday, actually, October 5th of 2012. I mean, have they? I mean, they've upgraded products, a bigger, smaller iPad, but what have they come out with?
they're a
Cook,
one-trick pony. Really, they kind of are. The iPhone is, I think, 50 or 55% of their revenues. So they are really heavily on the iPhone, and they do. They need something else. I totally agree with you. To get them up to the new highs, to get them up to that set, what's the high? 705, you said?
70507.
70507. For this stock, 70507, they do need to come out with another product. So I don't think iPhone's going to take them there.
well,
So
Joel, Cook's thing has been the expansion into China, and I mean that's been happening. That was kind of, I don't know, that was kind of like one of the things that Steve Jobs never wanted to do, and when Tim Cook got into his position of power, that was kind of like sort of one of the first things on his agenda, and
That
it's
that
just now
see,
playing out.
that was a setup. That was a setup.
What do you mean by that?
I mean, Jobs knew
Jobs
that,
had it already.
yeah, that it would be a potential driver after he passed away. So he didn't. He kept it in the wheelhouse. So when I mean, he didn't know how quickly or what he was going to go, but he kept that in the wheelhouse. So Cook would have something to keep the stock over 500.
That's pretty awesome. I never thought about that.
Yeah. So, but
Well, I think
anyways,
there was a lot of probably ideas that Jobs had in the wheelhouse, and it's a matter of whether one of those ideas do come to fruition here. I mean, they have been quiet here for a long time on the product front. Maybe they're working on something awesome. Maybe they will come up with something here, and that will drive them higher. But I'm not buying, like, and I do have this in my investment portfolio, but I'm not buying this for a trade really until I see something like you're saying, Joel, where we see something actually come out or an idea come out that's like, whoa, that actually is a really good idea. Like you get companies like Google, they're innovative. They're a lot more innovative. They sit there and Google's always coming out with new stuff. And you're like questioning this, questioning that, but they try so many different things. And I think that's why Google has just been, marching and marching and marching. That's just a really innovative company. And you could have said the same thing about Apple 2, 3 years ago, but they just haven't been innovative in the last couple of years.
what's that Google Apple spread at now? Look at that.
And we talked about that. We've talked about that before. And back in, I think it was October of 2012, both of these stocks, Google and Apple, were 680. And now Google is 1160 a year and a half later, or 15 months later, and Apple's 553. So Apple's down 130 points, and Google is basically almost doubled since then. So, or it's up 80% since then. So yeah, so the Google Apple spread is now looking, what is 600 points. So
And,
it's
and probably
Google has definitely been that was the buy back then. So at 680, then it wasn't Apple, it was Google. So and they're innovative. They are innovative. All right. Other earnings here. Let's move on to the wild child. One of the wild childs, ISRG, Intuitive Surgical. They reported earnings that were pretty awesome. 428 versus 377, 576 million versus 550 million. So that looks awesome on the top line, awesome on the bottom line. But then they had to talk. Expecting to sell fewer systems in 2014. That is not what anybody wants to hear. Stock down 26 points right now.
how come? Why are they? I mean, just they saturated the market already, or what? Did they
I don't
get?
know if they
Let's
said why.
see.
Did they say why, Brent?
I'm looking right now.
What did it
See,
spike to, Joel? What did it get at? Did spike? What was charts look like on
Wow,
that report?
the first bracket here, the first 15-minute bracket was 452.71
So rallied $13.
to 406.72. And then you gotta bounce up to over the 430 level. But this is kind of interesting pre-market chart though here, Dennis. Once you concur here, the 410 level is starting to show support here. Obviously, someone has an opinion here over the last hour. The last three lows have been at the 410 level. So 410, 412.45 here. I don't know. Big windfall for shorts bringing it in here. I'd look for this 407.70 pre-market low to hold.
I'm
I
kind of
will concur, Joel.
I'm kind of digging through a transcript from the ISRG call. There's a couple comments. Sees 2014 to be a year of increased investment. They reported systems sold of 546 in 2013, so that's where they're saying they're going to be below 546. So I guess maybe a little more spend on R&D kind of thing. Not sure.
That's not what the street wants to hear.
Nope, definitely not.
They want to sell, sell, sell.
Oh, they're selling that one this morning. But I tell you, one they're not selling is Jumpin' Juniper. Holy cow, that thing's up $1.50 right now. Juniper reported JNPR 43 cents versus 37. 1.27 billion versus I think it says 1.23 billion. I can't read my own handwriting though. Barclays upgrading them, William Blair upgrading them, and Juniper off to the races.
Goldman also upgrading today.
Oh, Goldman Sachs upgrading Juniper too. So, Joel, what do you think of the Juniper chart?
2780 was the initial spike here. We've come back in kind of trade over the last 15 minutes, half hour between 2735 and 2760. So kind of settling in a range here. So if you want to wait for a little breakout here from that range in the pre-market, really we're blowing away charts on the weekly, or excuse me, on the daily. So let's go to the weekly chart here and see if we can find something for our listeners here, maybe perhaps on the monthly. Well, if you look at the monthly here, that's a kind of interesting chart. I mean, if you go farther back, the stock was at 2.25 during the tech bubble and came all the way back.
Two and a quarter. Is that where it was?
Yeah, yeah.
Holy cow, man. That tech bubble, if you look at the chart, look at that chart. You say, we were in a bubble or we're in a bubble today. Go back to that chart again. That was a bubble. That was a bubble. I mean, those techs, if you weren't around trading the markets in 1999, 2000, that's when I started. I started trading professionally in 1999. And I tell you, back then, I can remember one guy sitting beside me, his whole strategy was basically just buy Amazon in the morning and sell it in the afternoon when it's up 20 points. That's
Wow.
just the way it was. There was all these other internet stocks. You had like Excite at Home. I remember that stock went from like 20 to 200. Where did it end up? Zero.
Who was that?
Amazon was the one that. What was the guys? Two places over for me. Remember there was Donnie, who was like a market maker on the floor, and then he came to Bright. And then there was sitting beside him was one of Donnie's buddies. It was this little Todd. Todd, was that his name?
Oh,
Remember Todd?
Todd Wodak. Yeah, yeah.
Todd, yeah, Todd. He was sitting there, and every single day, man, he'd be in some internet stock. He'd be buying it at like $70, and it'd be up at 80. And I was like, "You gonna sell that or what? You just made 10 points." He's like, "Nah, it's got another 10 points, man. I'm just sitting back waiting on this one." And the kid would just sell it. And he'd make 20 points. He'd make 20 points again. I don't know if he's retired now or what. But in the tech bubble, man, that kid was cleaning up, just buying tech stocks and selling them in the afternoon. Buy them in the morning, sell them in the afternoon. That was the strategy, and it worked.
SF Bright TG, and maybe one of your Bright buddies over there, just for a quick note on ISRG, says it's not cost effective to a few doctors that he's heard from. You still need the same number of people and time to do the same surgeries. So,
A little anecdotal there.
yeah, I mean, if it's not cost effective, then who needs it? And plus, if there's robots in there, and you can't. What do you do? Just shut off the robot if it starts to do something wrong? I mean, at least a human can make a mistake. But
Hey, real quick, Joel, jumping back to Juniper DJ, pointing something out that's actually a really great little news item here. I was looking at the Juniper chart and I'm going, okay, the stock popped after the report, kind of faded. It hit, I don't know, right around $26 around 5 p.m. and then you get this jump around 7 p.m. last night. I'm seeing an FT report from Jana Partners saying, or excuse me, not from Jana Partners, but FT report saying that Jana Partners is backing Elliott's stance on Juniper. So it looks like there is a little bit of upside in the stock related to that report from FT.
a little investor activism here. Is that what you're
Kind of hinting at it a little bit, yeah.
Okay. Okay. Well, we'll put that. We'll write that down. And looks like we lost Dennis again.
Testing 1, 2, 3.
You're here. You're here. What did you do?
Those gremlins, man. Joel, I tell you in the morning, you gotta lock the gremlins up. Don't let them come out.
No, you hit the mute button. Admit it.
I hit the mute button.
I knew it,
Always
I knew
passing the blame here. He mutes me. Joel didn't like what I was saying, and then he just mutes me. That's what he does, that guy over there.
Okay, we got
Crazy.
about 4 or 5 minutes coming before our guest comes on the show. So if there's any issues of interest out there in Moscow, you've been kind of quiet lately, or violin maker, get us some stocks here to look at. We'll try and give you our 2 cents with. And if Dennis and I agree, then you need to go the opposite way.
Oh yeah, always. If
Yeah.
we agree, you're in trouble. My Procter Gamble's pulling a little bit for me. It's at 78, 75 now. I'm still sitting short. I don't know where I'm going to cover that thing. I'll probably cover in the 79 handle. We got a couple upgrades and downgrades we can talk about here, though. Let's go into CMG, which is one we have not talked about. When did this become a $500 stock? Because I haven't looked at the chart for a while. Actually, I guess it was a $600 stock or $550 stock, but shows how long we haven't looked at CMG for. I forgot all about it after that last earnings report. I don't know if we've looked at it since then. But Chipotle, holy cow, it's been pulling back here the last 3 or 4 days. They're getting downgraded here at Wedbush today. So you got CMG trading down right now, another $5 or so, $6, 497.5. This is a pretty ugly looking chart here too. After topping out multiple times the whole 550 area.
Actually, Jake the other day piped up and said the exact same thing. When did CMG get to 500? And actually, it got a lot higher than that here.
Yeah.
Real bad couple days here. Was
Oh
at
yeah.
530, and now we're back under the $500 level. Pre-market trading here, just a low at 497.50, but that looks like an odd lot here. So not a lot of value in the pre-market here. I guess you have to go out a little bit farther. Let's go out to the weeklies here.
Gapping area. You're in that
Yeah.
gap up from the last report, I believe. I think that was the report back in October. When is CMG due to report, Brent? Can you hunt that down? Because that's probably coming up. End of the month, maybe?
That's what I do. Let me see here.
That's
So they reported their fourth quarter of last year during the first week of February. We're gonna get it either next week or the following week.
Okay, so it's coming up in about a week and a half. Well,
Yeah,
they're leaning a little bit bearish on this guy right now.
I think usually they report on like a Thursday too, so that's gonna either be the 30th or the 6th.
You got that gap area. I mean, nothing going down to the 477.34 low. So, boy, that's tough. That's in a vacuum area. And then you even get below that, and you have a gap area. So, if you're on the short side of this thing, just let it ride here. I don't know if I'd be a hero in trying to pick some bottoms. Let's just take, we got a few minutes here before we have our guest on. We do have a couple stocks popping in the chat room here. One I've never heard of. THRM. Dennis,
You never heard of THRM? I think I had call, or I don't know if it has options. I was trading it. I was trading it a little while ago, but I didn't realize this was up at new highs here again. I love these charts. You get these little biotech pharmaceutical companies, and man, these little guys can really pop in a hurry here. And this is another one that's been making new highs here, breaking out. It was a $24 stock just 4 days ago. Got up. The one concern here in the chart is got 28.05 2 days ago, and yesterday could not make a new high. I don't like it when they don't make new highs. So unless this can get up above 28.10 again, I'm a little bit scared to come in here buying this thing.
Yeah, here's another thing where you had a couple, nice rally up, expanded ranges day, and then, believe it or not, you had even though it had still a 66-cent range, you kind of had a tight range in it. So I think the closer you get back up to that $28, I think sellers are gonna, bring down off the 28.05. Someone was probably targeting the whole $28 level. Really was their exit point, but they figured they'd let it get up a little bit higher than knock it down. Below, if it takes out that 27.39 today, I hope it doesn't for your sake here. There's not a lot in here until you get under $27, 26.73. You've had a run here of 1, 2, 3, 4. Well, they broke the string of higher highs yesterday. Yeah, but you still have the string of higher lows going, and pretty big difference in between those lows. So keep an eye on that. I hope it would sneak back up to 28 for you if you're long. If it takes out 27.39, I don't know if I'd be too happy owning that issue. But if you've been in it for like any amount of time here, it looks like over the last
You're probably up.
Yeah, you're probably up.
This is a pretty sweet company, actually. Amerigon, you ever heard of that, Joel?
No.
Gentherm, formerly Amerigon, they are the maker of different heating and cooling systems for automotives. So
Oh, is that what they do?
yeah, so the heat
Oh, so this isn't
seaters,
a
the
pharmacy. If
You
that's
thought
dead
it was a
wrong,
no,
pharmacy.
no.
just pulling something out of my butt there.
It sounded good. Gentherm.
Gentherm. It doesn't it sound
Oh,
like
it's
it's a
it's got a farmer
biotech
ring to
company?
it.
Gentherm.
Absolutely.
You thought they were like doing genes and stuff, like
Yeah,
gene
that's what I thought.
therapy.
I was
Oh
like,
yeah,
oh
I'm
yeah,
gonna
I
buy
like this.
buy
Oh,
this
this is exactly
biotech.
not what I thought.
Uh, DJ's been trading this
CBI.
CVI. He's been on the day trade. Isn't it this one of Carl's stocks? Isn't it?
CBR Energy. I'm not sure if it's
Yeah.
one of Carl's stock, but this is one of your yield plays. This thing yields 7.5%.
Whoa, whoa, whoa.
This
Okay.
is very
Carl.
defensive. Is that right? Is that really yield 7.5%? Because that's what it's saying on my screen. Is that
Okay.
right? I'm
This
Uh,
gonna go
this
check
this
this.
is this is a big Carl stock actually. He's the largest holder. He has, as I'm seeing, he has over 80% of the company.
if you're trying 80%, is that
Holy
legal?
cow.
Is that legal?
I think so.
I,
Yeah.
well, I,
Is that right? He has 80%. No,
You know,
can't be right.
TJ, I
80%.
know you're
80?
looking for this a day trade here. I don't like that it took out the $40 level yesterday. It took it out, went down to 30.67. Actually had a really big range yesterday. We're trading up above the close here. If it comes back down to the close 40.09, I think
Oh,
that
it's opening down,
yeah,
Joe. We're down 9 points. You think that's opening up?
it says
This
it's
is
up
an
a
odd
quarter.
lot.
But Joe Young is getting on us here because we got our
Oh,
guest on
we're late.
hold.
We're
Okay,
late.
we don't want to get Joe mad. So we're going to
We're
take
in
a
trouble.
quick break and we'll be back with our special guest. Welcome back, traders and investors. We have a special guest on this morning, Kevin McCormally. He's the editor director of the Kiplinger, Washington editors. Kevin, how you doing on this chilly morning?
Doing just great, thank you.
Okay, so you're a tax guy, right? And the
Long time, yep.
Okay, and we're coming into tax season, and we're hoping that all our traders from pre-market info are going to have to pay some big taxes this year on
Because
all
they
the
made
money.
so much money last
Yeah, how
year.
much money on trading. So, tax season is approaching here. Just, quickly, what tips do you have for investors? I mean, I guess it's already the end of the year, so I guess we're a little bit late on this, but if you're sitting on large gains or large losses.
Well, you're right. I mean, it's really too late to do anything for your 2013. You had to trade by December 31st. But what you said about hoping that your traders have got big bills to pay because they had big profits in 2013, that's a good thing. But this year it's going to be a little more expensive than it has been in the past for high incomers because we've got the new 20% capital gains rate. It was only 15% was the top last year. It's 20% now. Plus, there's that new surtax on net investment income that can add another 3.9%. So it's going to be much more expensive if you made a lot of money last year.
Okay, do you have people just asking you like individual questions as far as like they're sitting on a big position and it's very profitable, but like they're hesitant to exit because of the taxes? And I mean, I think if what kind of advice would you give to someone that posed that kind of question to you?
we do get that question a lot, and then we always say, don't let the tax tail wag the investment dog. I mean,
That's a good
don't
point.
don't sit on a gain that you're concerned might disappear just because you don't want to share some of it with the government. I mean, there are things you can do. You scour your portfolio for paper losses and take them so they offset the gain to save you the taxes. But the market was up 33% last year, including dividends. I mean, the S&P, people made a lot of money last year. If they're sitting on those gains now, one thing we say, if you've got an allocation, it's time to rebalance because, if you started out with a 60-40, after last year, you could be 75-25 stocks
True.
versus bonds. That's more risk than you decided you want to take a year ago. Now, if you want to take that risk, that's fine, but make sure you look at that allocation today and say, is this crazy at this level? Maybe it's not. Maybe we'll have another. Kiplinger is predicting another, 10-12% for the S&P this year. I hope we get it, but it's not going to be 30 like it was last year.
What was that saying you just said? Don't let the tax. What was that saying that you just said? 'Cause I like that.
Don't let the tax tail wag the investment dog.
Yeah,
You just don't want to let that. It just, and people do let that. They think, oh, gee, if I sell this, I'm going to have to pay tax. That's because you got the profit and you're locking it in. There's a reason for that.
And that's such a great point because I can actually remember a lot of friends of mine back in the tech bubble, if you remember back like 1999 and 2000. And some of these guys are sitting on these ridiculous gains. They bought internet stocks for like $10 and they're up to like $50 or $100. They're up ridiculous, 500, 700, 800%. And it's exactly it. They didn't want to sell the stocks because they were going to pay all this tax. And what ended up happening in 2001? Completely, it all went away on them, and they ended up losing. And some of these stocks actually went to zero on them. So, I mean, that's a great tip you're giving right there.
But that's true. And people sit on that and they forget that you can lose this. And you save some money on taxes, but you lose 100% of it. So it's just not. It's not wise. I think it's hard. When the whole psychology of investing works against us. All the studies show that people love to buy stocks when they're going up, and sell stocks when they're going down, which is exactly the opposite of what they ought to be. We're buying high and selling low because there's this herd mentality, and we're thinking, well, gee, the market went up 30% last year. Now's the time to get in. Well, it might be okay to get in now, but wouldn't it be better to get in back then? And don't just follow the herd. You've got to have a plan for yourself.
Okay. Also, and I'm not sure if this goes into your expert area of expertise and stuff, but there are ways, to use the options markets to exit positions and minimize tax consequences. Is that something that you're familiar with at all?
Just barely, and I really can't speak to that. It's something I've never done much work in, but you're absolutely right. I know there are opportunities there, but that just takes to the level of complexity that I don't go into.
Okay.
I like simpler investments.
Okay.
You talked about the tax rates being higher this year. So, and I'm actually Canadian, so my tax rate's a little bit different, over here in Canada. Mine are already super high here anyways. But what is the difference now between we're looking at 2012, I guess, to 2013? What is the difference in the rates here if you're, capital gains?
The big difference is long-term capital gains, which is profit on something that you own more than a year until... if you remember the big fight we had over the Bush tax cuts, before the Bush tax cuts in 2001, the top rate on capital gains was 20%. And the Bush tax cut took it down to 15%, which it was for a decade. But effective January 1, 2013, and the returns that people are getting ready to fill out now, the top rate goes back up to 20%. And that's for people with incomes of over about $400,000, $250 on a single and $400,000 on a joint return. So it's just the top income earners, but I'm sure that's a lot of your listeners. And so they're going to be paying 20% on long-term gains versus 15%.
Okay. All right. So the government's eliminated a lot of tax shelters, and I know you've been talking about tax deductions, and I'm sure that's what our listeners want to hear about. What are some of the tax deductions for 2013 or 2014 that you consider because you need to go out in your event a year in advance? What are some of these deductions that are kind of under the radar?
Well, I think the one thing that we talk a lot about at Kiplinger or the deductions for non-itemizers. About 70% of Americans take the standard deduction. They don't itemize their deductions. And too many of those people think that because they take the standard deduction, they don't get any other deductions. And that's just crazy because on the face of the 1040 form, and I encourage everybody to go to irs.gov and download that two-page form because on the front of that form, page 1, lines 23 to 37, that's 14 lines, are deductions that you can take even if you take the standard deduction. These are the things that people miss. This is things like, if you're self-employed, you can deduct your medical insurance premiums on the face of the 1040. If you're an employee like I am, I can only deduct my expenses, my medical insurance premiums, if I itemize deduction, and then only to the extent that all of my medical expenses exceed 10% of my adjusted gross income. So if I make $100,000, the first $10,000 of medical premiums don't count. So I don't get that deduction. Very few employees do. But if you're self-employed, you can take 100% of that deduction on the face of the 1040. You don't have to itemize. It's not on your business return. So it's things like that. Social Security taxes is another one for self-employed people. As an employee, I pay half of my Social Security taxes. Mr. Kiplinger, God bless him, pays the other half for me. But if I were self-employed, I'd have to pay 100% of the Social Security taxes myself, and that's 15.3%. But on the face of the 1040, I get to deduct 50% of what I have to pay. Employees can't deduct it. They only pay half. They can't deduct what they pay. But if you're self-employed and have to pay 100%, you get half of it back on a deduction. So it's things like that. It's just to realize there are opportunities in the tax law for everybody to save. Don't just think it's fat cats. It's everybody.
Okay, all right. And then, also, I mean, I think one reason why people are a little bit hesitant to really dive into all the deductions and, find everything they can is they're worried about getting audited. What percentage of U.S. taxpayers are actually audited?
Fewer than 1%. Fewer than 1%.
Wow.
And, we're all supposed to be afraid because, the IRS is looking over our shoulder and we shouldn't cheat. I don't want anybody to cheat, but nobody should skip a legitimate deduction out of fear of an audit because it ain't going to happen. And of that 1% that are audited, 70% of those people, the audit amounts to a letter from the IRS saying, gee, you said you just paid $5,000 in a mortgage insurance last year. In mortgage interest last year, and the bank told us you only paid $500. Can you reconcile this difference? And you send in a letter and say, yeah, I can. Here's proof that I paid the $5,000, and it's done. 70% of the audits of Americans are called correspondence audits. It's simply a letter from the IRS, and they're usually looking at a single item, not your entire return. Very, very rare that somebody's going to come to your place of business or have you come to the IRS and go point by point over your return. Almost never happens.
Are there any red flags, like stuff that, somebody will do that is automatically like red flagged by the IRS, like significant stuff that you shouldn't deduct that should be avoided? Like I know in Canada, like there's like a few things like they always say, don't deduct this or don't deduct that. Like I've crossed the border a lot and you can't actually deduct your trip to and from work. And sometimes people will try to deduct the toll or different things. And my Canadian accountant says never do that because they'll red flag that right away. Is there any like red flags over there, in the US that you should avoid?
There's a lot of talk about red flags, but again, the one that's most frequently talked about is the home office deduction for self-employed people. And there are people who say, you should never claim this because it guarantees you're going to be audited. Well, I've looked at the statistics, and more Americans claim the home office deduction than the total that are audited. So that's just baloney that it's automatic. And again, I will say, if you qualify for the home office, and it's hard to qualify, you have to use part of your house regularly and exclusively for your business, and you can't have another place to operate the business. It's hard, but there are millions of people who pass this test. My son-in-law does. He's a filmmaker. He's got the basement of his house is his office. He only uses it for his work, and it's a legitimate deduction. It saves him several $100s a year by writing it off. So again, never skip a deduction because you're afraid of an audit. Now, when you talk about not being able to deduct the cost of commuting, we can't do that in the U.S. either. Commuting costs are non-deductible. So you can't deduct that, but I'm trying to think of where would you put that on your return. One of the things they say for business use of a car is it's real hard to deduct 100% of the cost of operating your car for your business because the IRS knows you probably use that car to go to a restaurant or go to the grocery store occasionally. So it's tough to go 100%, and you need good documentation to justify anything that you deduct. And the more likely thing that you're going to get audited on are things that you can cheat on. Employees, it's almost impossible for us to cheat on anything because the government demands that Mr. Kiplinger send them a note, the IRS, saying this is exactly how much Kevin earned last year. This is exactly how much he paid in so far. The mortgage company has to send the government a note saying this is exactly how much mortgage interest Kevin paid last year. The state government sends them a note saying this is how much Kevin paid in property taxes and income taxes last year. So they get all this information. I've got no wiggle room,
Right.
But if you're self-employed and you got this card and deduct and other things, so that's what they're going to look at, is areas that they know that people sort of, maybe give themselves a little bit too much of a break. That's what they're going to be looking at.
Okay, let's shift gears a little bit here. I see your expertise goes beyond, the taxes and helping Americans prepare their taxes, but I see you also do a retirement report and give people advice along those lines. And I guess, like, the first question is, for people that, my age and younger is, how long is Social Security gonna last? And if it's gonna run out, when is it? And what should investors do to prepare for their retirement if Social Security is not available?
Okay, first, I don't think it's going to run out ever. I mean, right now the trust fund has enough money to pay full benefits until like 2028, I think is the year. And after that, there's enough money, will be enough money coming in from new workers to pay 75% of benefits. I don't think it's ever going to run out. I think it's one of the most successful programs we have in this country. I believe it's going to be there, and I think that when you plan for your retirement, you should plan on having it there. Now, the key is how much you're going to get. And there's a great new service at socialsecurity.gov, the Social Security's website, ssa.gov. And you can go in and open an account for yourself. You answer a couple of questions, and you can get your own personalized benefit estimate. And it will show you almost exactly how much you are likely to get at age 62, at age 65, and at age 70. And this is critically important because if you deserve $1,000 a month at 66, which is the new full retirement age, if you deserve $1,000 a month at 66, if you take it at 62 instead, you'll only get $750 a month for the rest of your life. You'll get $250 a month less for as long as you live. But if you delay taking Social Security past age 66, they give you an 8% delayed retirement credit. So if you wait until 70, that $1,000 will go to $1,320 every month for the rest of your life. So count on Social Security, but know how when you claim it is going to affect how much you get. It's a huge difference.
Okay. Shifting over here too, you guys have an investing for income report.
Yes.
Just curious here, I'm a big fan of investing for income. I have a lot of dividend stocks, higher yielding stocks. Sometimes I'm doing covered calls against my portfolio to enhance the yields even further. What type of stuff are you guys looking at there? Is it like the dividend plays more?
Well, dividend plays, real estate investment trusts, the master limited partnerships, the oil and gas stuff is huge. I mean, you've got some stuff paying 11% now that you can get. We've got that's a specialized newsletter. We just had it for about we're just into our third year now. It's stunningly successful for a new publication. We're just thrilled for it, and we got one in it. We have the Kiplinger 25 for income, and we got utility stocks, high yielding bond funds, closed-end mutual funds and ETFs, real estate investment trust, and energy income funds and partnerships. There we got the BP Prudhoe Bay Royalty Trust, which is yielding now 13.5% on new money. That's the kind of thing we're doing. We've tried to put together a portfolio that you can rely on and not super risky stuff. We don't want people losing a lot of money, but we're saying,
right.
You don't need to leave money in the bank making 0.01%. That's crazy. You can do a lot better than that with your safe cash.
Okay, now we're talking about this stuff and really maybe getting away from your area of expertise here, but isn't a lot of this dividend and investment income based on interest rates? And aren't interest rates, is it the possibility of, what's your outlook for interest rates? I mean, we've been tapering or, potential tapering. Rates are very zero. What do you think about that?
Well, we don't believe that dividends are driven by interest rate. Yeah, it affects it a little bit, but dividends are paid by companies because companies are making money. U.S. corporations are making a fortune now, and they're sitting on a ton of cash. They've been doing a lot of share buybacks. They've been increasing dividends, and it's not just because interest rates are low. Now, are interest rates going to go up? They've got to go up. We're at historic lows, but we've been at historic lows for a long time, and the Fed is not going to pull the rug out from under the economy. I mean, Janet Yellen is not going to do do that. They're going to taper, which they've been talking about for 3 years, and they just started it, and it's going to be gradual, and they're going to do everything they can to have the most minimal impact. Yeah, bonds are going to lose some money. Yeah, but even when we look at junk bonds, high yield bonds, which are the ones that should have the most threat from rising interest rates, they also have the most benefit from an improving economy. And we think the economy is going to grow faster in 2014 than it did in 2013. We believe the recovery is for real and it's going to get better. Congress is finally getting out of the way. We hope they're going to raise the debt ceiling again. They actually passed the first budget in, God, how many years did they finally do their job and pass a budget? Businesses across the country are saying, we can start planning for the future now instead of worrying what these guys in Washington are going to do.
Okay. All right. To close things out, I mean, a lot of people like to do their taxes on their own. Personally, I like to put it in the hands of my accountant, a very trustworthy guy, and he finds all those little deductions that you're talking about. And there's a lot of tax preparation software programs out there. So people that want to do it on their own, do you have a preference? Are they all pretty good? Are they all is there differences? Is there anything that you would recommend for our listeners?
A couple of things there. First of all, about half the people turn it over to somebody and pay. Another 42% or so use software, and only about 8% of the people actually do it on paper. So software is huge, and it's growing, and it's great. Now, low-income people $58,000 or less, can find a free program at irs.gov. The IRS made a deal with the tax preparation industry a few years ago and said, look, we won't create our own software if you guys will give it away to at least 70% of the American people.
Wow.
So they come up with this $58,000, and if you go to irs.gov, and it's called Free File, it's there now. TurboTax is there, H&R Block is there, and they're all there, with a free program for people with $58,000 or less. You can do it right online, file electronically, done with it. We think it's great. Kiplinger, for years, we worked first with a very small company that was later purchased by H&R Block, and then we worked with H&R Block, and then after several years of that, we started working with Intuit and TurboTax, and those companies paid us to help them improve their software with Kiplinger's money-saving tips for people. So both of those programs, H&R Blocks and TurboTax, both have got a lot of our ideas built into them. We don't work with either of them now, so we got no financial relationship with them, but I tell you, both those programs are great. Personally, I use TurboTax. I have for the last 10 years. And one great thing about these programs is, once you've done it once with a program, when I start, I get my W-2 here at Kiplinger today, so I can start this weekend. The first thing I do, I'll call up last year's return, and it will populate 85% of what I need for my 2014. The name of every investment I have will be there. I just have to plug in the new number from the 1099 BIV. And so it really simplifies and speeds up the process. I think it's great stuff, and I think that people who like working with computers should definitely give it a try. And at least go, in addition to the IRS giving this away, I know at TurboTax, if you go to TurboTax.com, they have a free program there that at least you can start working with and see the kinds of Q&A you're going to be asked and see if you're comfortable with it. You don't have to pay unless you decide to actually file your return.
Okay, and just before we close out the interview, any final tips for our listeners here on taxes? I guess 213 is kind of already taking place, but hey, start planning ahead for 2014. Is there any tips you have for our traders and investors?
Well, absolutely, the most important thing is, the IRS next week is going to start the processing system. And one of the things they're going to be doing for the next 3 months is writing checks to Americans. They will write over 110 million refund checks, which means over 110 million taxpayers paid too much in tax, either through too much withholding or too much estimated tax payments in 2013. And now they're going to get the refunds, and they're all going to be excited about getting their money back. I think that's a mistake. You shouldn't overpay and then get a refund. We have a tool at Kiplinger.com called the Tax Withholding Calculator, and it very simply, if you answered 3 questions, it will tell you how to adjust withholding at work to eliminate next year's refund because you're going to get your money when you earn it this year. And if you file a new W-4 form with your employer claiming more allowances that our calculator will tell you how to figure out, you'll start getting more in your paycheck starting next week. And as for your investors, the points you made earlier is brilliant. All through the year, be looking at your paper gains and losses and thinking about the tax ramifications. Don't let the tail wag the dog. But, maybe you want to take some money off the table. Maybe you've got a big loss there that it's time to admit that it was a mistake, bank that loss, and then you can offset the gains later in the year.
Okay, we've had Kevin McCormally, editor director, Kiplinger Washington editors, and once again sharing a lot of his wisdom with us regarding taxes and the upcoming tax season. Kevin, thanks a lot for coming on the show. We'd certainly like to have you on again.
Hey, thank you guys. I enjoyed it.
Okay.
Thanks, Kevin.
Okay,
Okay.
take care.
All right. We're gonna
Hey,
move.
stay warm.
Okay.
Stay warm. That's a good tip because it is
Okay.
cold.
All right. All right, Joe. You got a tough act to follow here, Joe. Can you do it?
I think I can.
Okay.
The little train that could, I think I can.
Okay.
So, yeah, I just want to thank Kevin McCormally for coming on today. That was pretty cool. And to think you guys were slightly skeptical about having a tax professional come on the show.
He's solid. He knows his stuff. That guy's solid. Good tips right there.
Well, I must say that I and my interview gathering skills feel completely vindicated after that.
Well, actually, it was Dennis.
We were just scared that he was going to be too smart for us.
Dennis,
And he was.
Dennis the Hammer was coming down on that one.
Dennis the Hammer.
I was scared. I was like, oh man, tax professional, and I'm Canadian. I don't know anything about U.S. taxes. I'm like, I don't know. This guy is probably going to be way above me.
The Canadian Hammer coming down on the U.S. Tax Pro.
He was real good.
All right. Well, yeah, that was pretty cool, and we look forward to having him back on again, maybe even closer to tax season a little bit to get a refresher on how to not miss those commonly overlooked deductions. Moving into today's headlines from around the globe. Fiat Chrysler has made big plans for expanding the brand worldwide, particularly in fast-growing markets in Asia and South America. While the rest of the newly combined company is focused on getting more vehicles out of existing factories, CEO Sergio Marchionne wants to add new assembly lines in China and Brazil to produce Jeeps for sale in those markets. He and Jeep brand president Michael Manley also hope that new offerings such as the 2014 Cherokee will allow the automaker to boost exports from the United States. Jeep sold a record number of 731,565 crossovers and sport utility vehicles worldwide in 2013. Manley is confident the brand can do even better in 2014. Despite the legal troubles that J.P. Morgan Chase faced in 2013, which amounted to more than $20 billion in fines, Jamie Dimon, the bank's chairman and chief executive, is getting a raise. Jessica Silver Greenberg and Suzanne Craig wrote in Deal Book. The pay increase follows the board's move last year to cut Mr. Dimon's compensation in half to $11.5 million as reprimand for allowing a multi-billion-dollar trading mistake known as the London Whale. Conversations this week over Mr. Dimon's pay were fraught. Some on J.P. Morgan's board argued that Mr. Dimon's compensation should remain flat because of the bank's legal penalties, but others argued that he should be rewarded for his strong leadership in helping the bank move past its legal problems. Microsoft exceeded analysts' expectations on Thursday, reporting a record second fiscal quarter revenue that the firm claimed was due to strong Xbox One and Surface sales. The firm posted $24.52 billion in revenue and $6.56 billion in profit, which saw revenue rise 14% from the same period last year and net income increase by 2.8%. Microsoft is crediting its unexpected revenue growth primarily to strong Xbox sales after launching the Xbox One in the October to December quarter. The firm boasted that it sold 7.4 million Xbox game consoles during the quarter, 3.5 million Xbox 360 consoles, and 3.9 million Xbox One consoles since that went on sale 5 weeks ago. Surface tablet sales were up too, with revenue more than doubling quarter on quarter from 400 million to 893 million. Microsoft hasn't revealed how many Surface 2 and Surface Pro 2 tablets it sold, but claimed they have been selling better than its first Surface tablet model. Some of CNN's social media accounts and blogs were compromised on Thursday. The affected accounts included CNN's main Facebook account, CNN Politics Facebook account, and the Twitter pages for CNN and CNN Security Clearance. Blogs for Political Ticker, The Lead, Security Clearance, The Situation Room, and Crossfire were also hacked. The posts were deleted within minutes and the accounts have since been secured. Some of the posts claimed that the Syrian Electronic Army, a group of pro-Syrian regime hackers that has aggressively targeted major news organizations and activists, was responsible. Moving on, cell phone chip maker Qualcomm said Thursday it has acquired patents once owned by smartphone maker Palm from Hewlett-Packard for an undisclosed amount. Qualcomm says the purchase covers 1,400 U.S. patents and about 1,000 more foreign patents for the company's mobile computing technology. Hewlett-Packard paid $1 billion for Palm in 2010 as part of its first foray into tablet computers and smartphones, which ran on Palm's operating system. The effort flopped, and HP now sells tablets using Google's Android and a recently introduced version of Microsoft's Windows. Palo Alto, California-based Hewlett-Packard hasn't re-entered the smartphone market. Sprint has no intention of bringing back the Nextel brand for enterprise customers. Despite recent rumors to the contrary, the company confirmed to Fierce Wireless. In an interview with Fierce Wireless, Matt Carter, president of Sprint Enterprise Solutions, at first declined to comment on the rumors and then said that he hasn't personally heard anything about that at all. Sprint spokesman John Votava, I think that's how you say it, clarified and was more definitive. There's no plan to bring back the Nextel brand, which is fine with me because those little walkie-talkie things are annoying as you know what in the grocery store. Young veterans just out of the service and receiving health care from the government committed suicide at nearly 3 times the rate of active duty troops in recent years, according to new data released last week by the Department of Veterans Affairs. VA officials say the data show that severe personal issues driving self-destructive tendencies for those in uniform follow them when they leave the military. The Army has struggled with suicide among active duty troops more than other service branches during the wars in Iraq and Afghanistan, and the risk persists after soldiers return to civilian life. They were wise guys or good fellas, the federal government said Thursday of 5 reputed mobsters indicted in connection with a string of unsolved crimes, including the fabled 1978 Lufthansa heist at JFK International Airport. In an indictment that reads like the script of Goodfellas, alleged mob captain Vincent Asaro, 78 years old, and other alleged members of the Bonanno organized crime family are accused of murder, racketeering, armed robbery, arson, and extortion. In the infamous Lufthansa robbery, a band of robbers stole about $5 million in cash and nearly $1 million in jewels from an airline cargo building in the largest cash robbery in the nation's history at that time. The robbery was part of the story in Martin Scorsese's 1990 Goodfellas film about organized crime in New York. Also, Thursday's indictment opened with a primer on the hierarchical structure of the mob or La Cosa Nostra and one of its most notorious families, the Bonannos, with explanations of the roles of its boss, consigliere or underboss, administrations, crews, captains, soldiers, associates, and Goodfellas. Bill Cosby is returning to NBC with a new sitcom, a network representative told CNN Wednesday night. The comedian will play the patriarch of a multi-generational family. The show brings the 76-year-old comedian back to the same network where his groundbreaking 1980s sitcom The Cosby Show had an 8-year run, which ranked #1 in the ratings for 5 straight years. And today's trivia tidbit: on this day 30 years ago, the Apple Macintosh 128K went on sale and became bundled with 2 applications designed to show off its interface, MacWrite and MacPaint. The Mac was introduced 2 days earlier during a Super Bowl commercial which referenced George Orwell's 1984, leading the way for the captivating Apple ads to come. It was first demonstrated by Steve Jobs in the first of his famous Mac keynote speeches. Just as the 5 1/4-inch floppy disk drive was an innovation in the 70s, the 3 1/2-inch disk drive will be the disk of the 80s. It is far safer, and we're storing over 400K bytes of information on one side of a disk that can be put in your pocket, Jobs said at the conference. Though the Mac garnered an immediate enthusiastic following, some labeled it a mere toy. And today's trivia question, everyone on your mark: how much did the first Mac 128 cost? What do you say? What do you say? How much did the original Apple Mac 128 cost when it was introduced?
$1,280.
I heard Jake say 10,000. Joel said 1280.
Yep.
Brent, any thoughts?
I'm gonna say like $900. I'm going on the low end.
He's on the low end.
Yeah,
Anyone in the chat?
playing devil's advocate.
What are we giving away today, Joel?
2 free weeks of Benzinga Pro.
2 free weeks of
We could-
Benzinga Pro
we-
and
we could
dinner
probably-
with Joel.
We could probably do like a month. We could do 2 free weeks and dinner with Joel, or 1 month if
Or
you
maybe
if you don't
I'll-
like Joel.
If they want to come into Michigan, I'll take them out for one of Dennis's Potbelly lunches.
Potbelly
I
lunches.
don't know how Dennis is gonna feel about this. I don't think he's gonna like it. He's gonna be chatting in here in a sec with some with some dollar signs and at
Oh,
signs. And
violin maker, guess $4,500.
Hmm.
All right, so we got 10, 1280, 900, and 4,500. The answer is $2,495. The Mac 128K was designed to achieve adequate graphics performance, which had previously required hardware costing over $10,000. Jake, a price inaccessible to the middle class. This narrow goal resulted in an efficient design which traded off expandability but met or exceeded the baseline performance of its competitors. That wraps it up for today's editorial headlines. Just a reminder, ladies and gentlemen, that this show would not be possible without our dear friends at OptionsHouse. That will give you 150 commission-free trades just for signing up for an OptionsHouse account through this page. There's buttons at the top, at the bottom right. Go ahead, click through, open an account through OptionsHouse. 150 commission-free trades just because you listen to Benzinga's pre-market info. That wraps it up for me. I'm going to lob it over here to my man Brent, who's going to give us some
Lobsky.
rating
Well, before
changes.
before we
Whoa,
need
whoa,
we
whoa,
need we need
whoa.
Violin Maker to send an email to Jake at benzingapro.com to get his 2-week free trial. And I think Violin Maker is also a local guy here in Michigan. So we will, if he comes into the Benzinga office, we will give him one of Dennis's free potbelly
Oh my
lunches.
gosh.
I mean, that's great and all, but Violin Maker's guess for the price of the original Mac 128K was $2,005 over the actual answer.
Who was closest?
Who is closest without going
Prices-
over?
I prices
would have
righted
been
it.
Joel Ski over here. So Joel, you get to buy yourself
Oh
one of
my
Dennis's
gosh.
potbelly lunches.
Well,
Congratulations.
just for the,
This
we'll
is
go the
BS.
special today, and we'll say it's closest in going over is okay.
That's
mean,
not,
he
that's
wa-
not how they do it on The Price is Right.
We didn't clarify if this was Price is Right rules or not.
Oh yeah,
that
and
should
Joe,
have been clarified.
and you're the
before.
one that's talking about rules when it comes to bets here. As
Oh,
Buffalo
come on.
Wild
Dennis,
Wings
Dennis, why
goes
did you
to
hop
one-
off this early? He's at it again.
133 at Buffalo
He's
Wild
trying to
Wings.
buttonhole me on the bet. I make one bet with the guy. Dennis, where are you? I need your help right now. I'm gonna hop off before this gets any worse. Brent, take it away.
I'm gonna have to separate you two. Is that what you're saying?
Good thing these cords keep us a certain distance away from each other.
See you strangling each other later. So let me see. Let me go over some of the. There's Dennis. He's. Oh no, that's Joel tricking me again. Joel tries to weasel his way out of every bet. Wise words from Triple D. So I'm looking at some of the notable rating changes this morning. Let me go over a couple of downgrades here. I'm just scrolling through my trusty handy dandy Benzinga Pro calendar. You all can look at it too if you tune in to the Pro feed. So let me see here. Transocean shares did get a downgrade this morning at Wells Fargo. Let's see. Coach getting a downgrade from Cantor Fitzgerald following results a few days ago. Cantor Fitzgerald now rating Coach shares with a hold. Barclays downgrading shares of TRW, one of those auto suppliers. They are now rating that stock with an equal weight rating. Wells Fargo downgrading shares of Diamond Offshore from outperform to market perform. Citi getting a downgrade this morning. Bit of a boutique firm here, but nonetheless a downgrade. Atlantic Equities downgrading shares of Citigroup from overweight to neutral, cutting that price target to $55. And we did talk about the Wedbush downgrade on shares of Chipotle. Firm now rates the stock with a neutral. They did, however, maintain their $510 price target. And shares of Chipotle are notably below that $500 level. And kind of just sort of what Dennis was saying a little bit earlier. I look at the chart today and I'm like, wow, that stock's been over $500 since October.
Yeah.
So it's been quite some time since we've been under $400. I think that this is going to be a pretty notable day for Chipotle.
Do you like Chipotle? I mean,
You know what? It's if it's got to be a battle, we're going between Chipotle and Qdoba. And okay, the food, I mean, really good food at both places, pretty much the same. I don't know if you ask me, but you know what? Every time I go into Chipotle, I have a unfavorable customer service experience. And every time I go into Qdoba, they're like so happy to see me. They're like, "Oh, how have you been? I've never seen you in my life, but how have you been?" So that's kind of my opinion on the Chipotle versus the Qdoba, which is Qdoba is Jack in the Box, I believe. Jake, is that right? Qdoba. Jack. Good old Jack in the Box.
I don't like either.
No, are you not like a Mexican fan?
I love Mexican
Huh.
food, but I'm not a fast food Mexican guy.
Gotcha.
And I went into Chipotle, and they just throw all the stuff in there.
You know,
and
that's
then
what it's
wrap it up.
like.
I don't know. It's kind of like a sloppy burrito to me.
Right.
And Taco Bell, I call Taco Hell. So
I think that's
so
about right.
I
Yeah.
like to go to these nice. I don't know. I don't know. Is there such thing? But anyways, we got any other ratings going on?
That should do it for the downgrades. I'm gonna take a look at a couple of the upgrades. Actually, I'm only seeing 5, 10, less than 15 upgrades this morning. I don't know. Some traders like to sort of use the number of upgrades and downgrades kind of anecdotally to maybe get a indication for just how the market's gonna move today. So in that case, we're leaning a little bearish today. Juniper getting an upgrade to overweight at Barclays following those results. Also William Blair, and there was one more. I forget who it was. Let me just check that really quick. I think there was 3 upgrades on shares of Juniper this morning. Also from Goldman Sachs, excuse me. That was the most important one. I forgot about good old Goldman Sachs. Shares of Angie's List getting an upgrade from neutral to buy over at B. Riley & Co. Nokia getting an upgrade at SocGen. And let's see, Susquehanna upgrading shares of Maxim Integrated from neutral to positive. Maxim, I believe, had some earnings. Was it last night? I think it was last night. So we got Maxim shares trading up just about 1% this morning. Not too much action there. But we got about, 5 minutes or so before the bell. I hope everyone's ready to get this trading day started. Happy Friday, everyone out there.
Okay, I'll let you switch things up there
Alrighty.
with Shaky Jake, and let's just cover a few of the hot rods here that we like to go over. You guys are active. I don't think we had anybody weigh in on Twitter this week. It's been pretty quiet week on the analyst front. And
What does that mean for the market when no one's talking about Twitter?
well, on a day like this when the market's down, the brokers are like, "Oh, I'm gonna take the day off. I'm not gonna come into the office today because the phones are ringing off the hook." People are like, what's going on?" But let's take a look at Twitter, and this thing is in a wicked consolidation period, and this thing does not stay within a tight range for very long here. Over the last 4 trading sessions in Twitter, wow, this is unbelievable. Between 60.46 and 62.81, a 2.5 point range over the last 5 trading sessions. This will not persist here. The bottom of the range is 60.50, or actually it's a little bit bigger range than that. It's been from 60.46 up to 63.80, so 4-point range over the last 5 sessions. Still, that's kind of tight. Kind of trading in the middle here. I'd say you break below that 60.50 level, you could see quite a bit more downside here. Coming back on the upside, I think 62.81, your minor resistance point, but looks like the sellers are ganging up here in the mid 63, 63.44, and 63.80 were your highs on Tuesday and Wednesday. Jake, how you doing?
Morning, Joel.
Jake and I got a little bit of loggerheads here. I just big basketball game on Saturday, and now what did Brendan Dawson do?
So he's watching film of himself play. He got angry and punched a table and broke his hand. That was our power forward.
I mean, couldn't he
Starting 5-star recruit. Awesome.
Yeah,
nice work.
Couldn't he say that he was helping an old lady cross the street, and someone tried to steal her handbag, and
I don't know.
He grabbed it and broke his hand doing that?
It's just I guess I don't understand how you can manage to pull that off. He's out for 4 to 5 weeks now, with our center out as well. So very small Michigan State team coming into the game. I guess at least we'd have Appling and Gary Harris, but Appling is also injured as well. He has a sprained wrist, so that's not great. And an injured back as well. So our whole team is so banged up right now. It's hilarious.
So you're only giving me 5 points now, then, right?
Jeez, I mean I don't think Michigan State should be favored at all in the betting right now with how much we're down. But we'll see. Maybe they come out with some kind of a miracle. But
Before
before
we go into these individual issues that I know you're good at digging up on, I coming in the morning, the S&Ps are down, the
Mhm.
market's going on, and I keep on I say, Jake, and Brown, what's going on? What's going on? And a theme over the last couple days that you've been mentioning is what's going on over across the pond here with little bit of international turmoil here. You think that that's spooking
Well,
investors?
I mean, there's a lot of things going on around the world right now. I mean, I guess first off, I'll start in Argentina, where there's riots going on for to kind of go over the hyperinflation there. You have the problems in Ukraine right now, particularly I think it's Kiev is where it is, and they're having massive riots there too. I don't necessarily think that's the cause of the dip in the futures, but when you get a catalyst that causes the dip, that's going to kind of accentuate it. We had some comments out of Carney from England this morning. Let me see if I can pull them up real quick so I can actually get yeah, so the headline I'm seeing here is Traders Dancing on Hot Coals on Carney comments. He said that basically the unemployment picture is still not improving in the UK, and that they don't plan to raise rates anytime soon, which you'd think is good for the markets. But when they're saying that the conditions are not great, that's not exactly going to be stellar. You still have the Syria talks at an impasse right now, and then you still have Davos coming out of or comments coming out of Davos every now and again. So I guess the quote was sterling appreciation will hamper export growth, says Carney. Headwinds to UK growth will still persist. Global economy has picked up, but risks remain, and stimulus will remain exceptional for some time. So that's the UK saying that their stimulus is going to remain, but you also have hints from the Fed that we're trying to pull back on our stimulus. So you could get some contradictory things there. You've also had this huge rally, and maybe traders just want to find an excuse to sell it off. But whatever it is, there's a lot of macro news just kind of going on in general right now, and I think traders maybe just kind of using it as an excuse to take profits and then maybe get back in next week or something like that.
Okay, so what do you got on the radar here?
Well, as far as individual names, we did have Microsoft reporting earnings yesterday, and we got to go over that because they just hit it out of the park. EPS came in at 78 cents, crushing estimates of 68 cents, while revenues came in at 24.52 billion. The Street was looking for 23.68 billion, so Microsoft looking strong there. Especially with the weakness in Intel and AMD leading into this report, I was not too confident in the consumer tech, but I mean Microsoft's enterprise portion seems to be really holding it ahead. It's up 3.5% right now. I mean, Joel, what do you think of Microsoft? This is quite a rally.
Yeah, it is, and it's a big stock, and it's going against the grain of the market here and doing a very good job of it. Got up above $38 in the pre-market, trading up to $38.05. Had a lot of consolidation around 37. But now let's look at the day session. The day session for Microsoft. You did open up at 37.45, and you rallied another nickel. And then that was it. Hit the brakes there. So now we are pulling back. So if you're playing this from the short side here, lean on that open and that high there. As long as that stays in place here, I think Microsoft, is going to get back a little bit of ground here. Maybe you did see support in the pre-market at 37 even, and with the S&Ps just cascading lower here now, down. We are coming 0950 was the low that you had. It's been the yearly low. We did hit that out. Did hit that in the pre-market. Got to 08 even. So coming up to a big level here, folks, for support for the market to hold. What else you got for us, Jake?
Another one from after the close yesterday is Intuitive Surgical. That's India Sandy Romeo Golf for anyone on their own charts there. Company makes the robotic surgery machines, basically allowing a doctor to remotely perform a surgery. You'd still need nurses and stuff in the place, but the doctor can be from anywhere. So the huge potential here was theoretically you could build these intuitive surgical stations, let's say in Africa, and have the most skilled doctors here in the United States perform the surgeries without having to go there. So there's a lot of potential with that. Well, the company did beat on its fourth quarter report, 428 versus a 377 estimate. Revenues beat as well, 576 million versus expected 551. But there's one comment from the conference call there. Intuitive Surgical expects to sell fewer systems in 2014. I mean, when you say you're going to sell less of your product in 2014, traders are never going to really like that one. It's down over 6% now.
It had a wild pre-market session here too. Let's just pull it up. The initial spike got it up almost to the 450 level, and then you came down very, very hard under 410. I think. Let's see what the pre-market low was here. Pre-market low, the initial spike down took it to 406.72. We discussed this actually. Dennis and I kind of agreed on this one a little bit here. Big gap down. I mean, not great news, but just from a technical basis here, someone had been a buyer at after the 406.72 low. They upped their bids a little bit to the 408 level. Then they bumped it up to the 410. So you got support creeping up. I just think it's a big windfall for people here that were short, and don't think we're going to see that pre-market low.
Another one we had moving to the downside this morning with a lot of strength. It's kind of coming back now. Is Alcoa. We've been talking about this one a lot the past couple of days. Alpha Alpha is the ticker there. A company that just got kicked out of the Dow fairly recently. So the company was, as the world, markets were kind of dipping this morning. So was the aluminum market. It was down. Prices were down 1.12%. So that could be hurting it. The company did announce it's going to increase the size of its board from 11 to 12 members. That really shouldn't be doing it. So it looks like it's kind of a mix of macro weakness. Perhaps some of those comments coming out of Carney, and then the drop in aluminum prices. Shares are only down about 1% now, but if you could look back in the pre-market, the lowest I saw was, I think it was down 2.3%. So
yeah, you're right.
Yeah, we had a big dip this morning. It's kind of recovering now. Perhaps coming back maybe to that $12 level. Was it like a 11.94 right now is what I'm seeing. So I mean, it could come back to that. Joe, what do you think of Alco? We've been on a big run recently. People were kind of speculating maybe this one's finally coming back, but do you think it's just profit taking or what?
Yeah, it had a big run up. Actually, the company after earnings had the only dip down you see there is when the company had the earnings, took it out under the $10 level, and then just skyrocketed it up over 12. You got a little double top there at 12.31 and 12.32 earlier in the week, so that was a little signal of a reversal here. Traded down to 11.69 in the pre-market. That's kind of hard to believe here, but I'll have to concur with you on the $12 level. 11.99 was yesterday's low. 11.98 was your high so far in the session. Probably had a lot of people buying at the 12 even level because 12.01 was the low on the 22nd. So that's going to be resistance today. If it can get back through there, you gotta respect the settlement too. Coming back on the downside, if it does reverse, go through the current low 1187. You do have a 4-day low at 1177. So Alcoa moving around.
Yeah, for sure. I also wanted to note, kind of supporting your idea that maybe it's traders just taking profits here. The stock's gained 18% over the last 9 sessions. So when you get that kind of a rally, traders may be just looking for an excuse to sell off the shares. I think a lot of people are kind of afraid of this big early year rally, especially with what we did last year. So maybe just looking for an excuse here, but definitely want to keep an eye on Alcoa for today's session. Another one I want to take a look at, the ticker is Foxtrot Tango and November Tango, so FTNT. Fortinet is the company.
I've heard of that company.
Yeah, there we go. So the company is going to be added to the S&P 400 next week on January 28th. So we want to keep an eye on this. It may cause some fund managers to add it to their portfolios if they're trying to mimic that index specifically as a benchmark. So it's causing a little bit of a rally this morning. It was up roughly 3%. It looks like we're sticking around there. It's above that psychological whole number of $22. Joel, do you have anything here? I mean, this is totally trading. It's not necessarily fundamental news on the company. So now it's just right in your wheelhouse.
Do they make internet for people that live in forts?
That must be it. I can't imagine what else they might do.
You got to pop in the pre-market when the news. Actually, it was after hours when the news hit the wires. Took it up to 22.35 here, but during the regular session, opened up at 22.21. Hit 22 and a quarter, so you're gonna have major resistance here. 22 and a quarter, 22.35. Sitting on the low here, $22. You have a gap to get down to 21.49. You got to think that some people that could care less about it going in the S&P 500 maybe are
Well, it's the
using
S&P
this
400.
S&P
Yeah, all right,
400.
yeah.
Okay, all right, could care less, and then they're getting this pop in the stock here, and are looking for to using this as a exit opportunity.
Well, and another thing to consider here is I just looked into what the company did, and this is obviously going to be a popular name. The company provides network security solutions, including firewall, VPN, application control, networking functions. Essentially, this is one of those companies that is probably going to make a ton of money off these target breaches or any of these big hack attacks. So that I think it's FireEye is the other one that can do that. But just kind of interesting to think about that, and maybe that's why they're getting so much hype right now.
Okay, buck a low from the pre-market low here. 1809.50 was the low for the year. We hit 1808 in the pre-market here, coming down to 1808.75 here. So, you long-term bulls, you need a rally here.
Right. Another equity we've actually got on the rise this morning is Angie's List, ANGI Alpha November, Golf India, for anyone watching along on their own charts. Now, this one's been on quite a rally recently, and it did pick up an upgrade from B. Riley this morning. It was a buy rating, bumping that price target to 25.50. It's trading just over $17 right now, so kind of broke that whole number. It's up almost 5%, almost a full point now, so quite a big move. So up. It was the pre-market is up only about 3%, so it's been only picking up steam at the open
Wow.
here. Any thoughts on Angie's List? I mean, we had quite a bit of a rally recently.
Do you go on Angie's List?
You know what? I don't. I heard it's kind of expensive to use. We were talking about when we were having trouble with our hot tub. We were talking about going on Angie's List and trying to find an electrician to work with it. And we ended up just calling electricians directly because we found out that you have to pay for a subscription on our side, and the electricians have to pay. So it's like both sides are paying. I guess, yeah. No, we didn't end up using it, but I've heard it's kind of interesting. I don't know.
I haven't ever been to the site here, but you got a spike in the pre-market over the $17 level. You're pulling back now here, so opened up, pulling back here. I don't think I would chase this one, as Dennis would say. Maybe let it come back into yesterday's range. Looked like you had some lows in the lower 16, so definitely bucking the trend in the market, though.
Yeah, I want to move over to some of the earnings reports from this morning. I did get some good names, so I'm going to pull up a couple of those. Definitely something you want to kind of keep an eye on at the open today. Bristol Myers, Bravo Mike Yankee, EPS of 51 cents versus expected 43 cents. Revenues of 4.44 billion versus expected 4.29 billion. So big name reporting there. Showing some strength on its report. That's a beat on the top line, which I think is really interesting to look at because we've had so many companies beating on the bottom line but not on the top. Any thoughts on Bristol Myers?
Yeah, it did get a nice pop. I had identified the four highs between 55.07 and 55.18. We did blast through there. Went to 55.40. Rocketed off the open here. We have pulled back here, so high of the day maybe in here. I think you get another pop back up to the 55.40 level. Sellers going to be lining up here. Coming back on the downside. Had a spirited rally off the open here, so about a buck rally. You take back half of that. I think if you pull back under the $55 level, perhaps 54.90, 54.95, you should find some intraday support.
Another one we had to report this morning was Honeywell. That's Hotel Oscar November. Company reported $1.24 on the bottom line versus expected $1.21. Revenues came in strong as well at $10.39 billion versus expected $10.19 billion. So another beat on the top line. Definitely interesting to take a look at there. And real quick, we also had Procter & Gamble, Papa Golf, reporting earnings beating on the bottom line, $1.21 versus $1.20 estimate. Revenues coming in at $22.28 billion versus expected $22.35 billion. So slight miss on the top line, but very very slim there. And then we also had Covidien reporting $1 on the bottom line versus expected 94 cents. Revenues came in at $2.64 billion versus expected $2.6 billion. So if you're looking at the biggest names that reported today, a majority of them beat on the top line or missed very, very slimly. So I think today's the reports, at least this morning, are looking pretty good for the market. Despite the fact that the financials were a little on the weaker side, and we had a couple of weaker reports this week. Some of these are some pretty big names doing fairly well.
Yeah, but the Honeywell opened up right at its high tick, opened up at 89.55 and has pulled back quickly to 88.59. This is the lowest this issue's traded since January 13th when it made an 88.74 low here. So needs to get out of here fairly quickly. Get back into the 89 handle. But once again, the open was a big number. Just looking at Microsoft here, it did pop back up through that, made that opening high 37.50, and then went to 37.55, and then washed out. So hopefully that little bump up to 37.55 didn't shake you out of it. S&Ps are just falling out of bed here, Jake. We are now through the pre-market low of 1808. Now we're trading at 1807, and to be honest with you, I just don't see any support in this market. I mean, it's probably going to be a good signal for a turnaround here. You need to go out to, let's see here, 1806.75 last print here. Let's see here. Next target on the downside, 1802.50. That was the low on December 20th. We'll probably be there in the next minute and 30 seconds here. 1802.50, the next level on the downside to keep an eye on. And before we close out the show, Joanne, we saw you signed on a little bit late here. I tried to send you a message, just wondering how that Netflix trade worked out for you yesterday. I know it traded quite a bit higher, so if you could just pop in the chat, let us know how that worked out for you. We'd be glad. We'd like to hear about it. S&Ps just made a low at 1805.50. Let's keep a low on the 1802.50 low. The session opened up at 1811.75, made a high at 1812.25. So don't even think about a rally until we clear that level. Well, thanks for participating in Benzinga's pre-market info show, brought to you by the good people at OptionsHouse. Have a good weekend, and we'll be back with you on Monday.